Hello, people out there on the worldwide interwebs. It is. What date is it? Wow. Thursday, this September the 5th day of 2024. Can you believe we are into September? It's amazing how quick time flies. But welcome to the Financial Thing weekly live stream. I got to show that. Because, of course, we're sponsored by Cufflink. And I'm glad to see everybody here. Glad you're here. I hope you enjoyed last week. If you were here on Thursday, you would see Peter Reed from Assets Exchange, who was here live. If you didn't get a chance to see that, you can catch it up on the archives on the YouTube channel under the live video tab that they have. So, yeah. I really enjoyed it. I thought it was a great stream. I hope you enjoyed it too. Hit that thumbs up if you can too. It helps the stream a lot. And if you're not subscribed, subscribe. What are we talking about today? We got some P2P stuff to chat around. And I went into the mailbag, grabbed 3 or 4 interesting reader questions that I've been sitting on for a while. So I thought go through them, talk about investing, finance, and tea. Too. We're going to talk about tea. It's been a rough few days on the stock market. The trading 212 portfolio has taken quite the punch in the nose, and that is the risk of investing the way that trading 212 portfolio is invested. Trading, not really a good idea, but I do it for the charity. I do it to show you experience, to show you not what to do. I think you guys know what not to do, but there are a lot of people that email me that still want to buy individual stocks and shares. So this is why I keep doing the Trading 212 portfolio. We're going to talk a little bit about what's happening with the Bitcoin world. We're going to talk Vanguard. We'll talk peer-to-peer, talk a little bit of news, other things, this and that. And quick word about our sponsor, of course, which has changed its rates recently, which you need to know about, and we'll talk about that too. But now, Cufflink's new rate, which appears on the 2-year product, and they, of course, are the generous sponsor of the stream. Now, you can get up to 9.13% gross per annum. That is on the 2-year product with the Auto Invest. Over 350 million pounds invested by people like you and me since 2016, 0 investor losses to date. Capital is at risk. Please don't invest unless you're prepared to lose money. Please check rates on Cufflink's website as these interest rates do change. You can sign up at join.cufflink.com/financial-thing. The link is in the description of this YouTube video, as always. Yeah, so if you missed out on the fabulous Cufflink interest rate that they were offering on the 1 year, which I did tell you guys was a great rate. Well, unfortunately, it's not there anymore. But of course, that happens as we see interest rates start to drop. You're going to see peer-to-peer lending rates also probably fluctuate, and maybe some of them will start to drop as Cufflink has on its 1-year product. But let's get right into it. We'll have a quick hi to people in the chat. Colin in the breezy Peak District. I heard the weather has been absolutely foul in the UK. I do get my daily weather updates from family. So very sorry to hear that. It's very overcast here in Orlando today. Still very muggy. It's probably about 30 degrees, very humid, but it looks like rain. We're coming into our storm season now. High peak, September, October. The 8 weeks of nastiness that we have to endure here. Possible hurricanes, who knows, but nothing terrible on the horizon yet, but we'll see what happens. Yeah, so Aki Chap is here in Accrington, Paul New in a very windy Wales, Dave Dawson is here, Paul Bagworth in Kenilworth, Alan Stratford in Worcestershire, Paul Bagworth says it's also raining, Peter Vince is getting wet in Leatherhead, Stephen Hale, wet Weymouth. What you doing in Weymouth? I used to go to Weymouth a lot. Like that place. Annabelle Nyron, back in sunny Spain. You are lucky, because that's a better place to be. Aki Chap says it's raining again. Always raining. Chimpo Naughty is here. And so is Mike Powell, of course. Welcome to everybody. If you're watching in the future, welcome to you too. Come join us live usually every Thursday. A little bit of housekeeping. I'm going to be taking a holiday, probably, I think, October the 10th to October the 28th, so I won't be here. You guys are going to have to manage without me. I'll be back shortly after that. Oh, there's the pup. She's having a quick snooze. But yeah, put down your diaries. No streams. I don't think there's going to be a stream during those 2 weeks, but plan on there not being one. And if we get one, extra bonus, right? Let's get right into it. We're going to take a quick look at LoanPad, because we haven't looked at their stats page in a hot minute, as they say. Look at this. 18 lending partners. These numbers haven't really changed that much, I don't think, over the last month. £180 million total loan value. Still around 5.5 million in total LoanPad loans. I've noticed this average lender amount starting to creep up. Used to be in about the 16,000, but I seem to be hard stuck at this 5,500 total amount of lenders. But the main thing is that the LTV, the loan to value, which you always want to keep an eye on, is still at a very, very reasonable 41%. No loans are being covered by the interest coverage fund, which is very small anyways, but always good to see that. And then estimated time to sell and invest, less than 1 day. We expect soon, hopefully before the end of the year, to have this new update from LoanPad's user interface, and hopefully maybe we get rid of the £10 minimum for auto invest. But total number of LoanPad loans since inception, 727 loans, and 499 of those have been paid back. Good statistics, right? I think so. Let's look at some news. Somo. They've had a court victory. I know some of you guys out there and girls are Somo investors. Of course, the UK property-backed peer-to-peer lending platform. But Somo's investors have praised the property lender following a recent court victory against two unscrupulous borrowers. That's a great word, isn't it? Unscrupulous. Somo, an award-winning lending platform, I spent the last 3 years in court working to resolve a case to protect investor capital. The case related to a married couple, Mr. and Mrs. R, who took out a loan with Somo in August 2020 for £421,600, repayable within 12 months. The borrowers offered their main residence as security and agreed a repayment plan, which involved selling the security property and other land assets that they owned before the loan term ended. However, when they failed to meet the terms of this repayment plan, Somo was forced to commence default proceedings. In November 2021, Somo appointed a receiver in respect to the property and placed the borrower's company into administration. And in January 2022, legal proceedings were started. Just shows you how long the darn court systems take to work, right? I mean, this is a loan from 2020. It didn't go into court until January 2022. And now we're coming towards the end of 2025. So it's great having security and, personal guarantees, but the fact of the matter, it takes a long time for these things to be resolved, especially if it goes through the courts. The case was immediately complicated by the fact that the couple chose to be represented separately. Sounds like there was a domestic dispute going on. While Mrs. R argued that she'd been a victim of undue influence from Mr. R, this raised the possibility that Somo may only be able to claim half of the security if Mrs. R's share of the loan was found to have been in the result of illegal coercion. People don't really talk about this enough when it comes to loans, but there always is some kind of a spanner that gets thrown into the works when it comes to lawyers coming up with reasons why people shouldn't have to pay back their obligations of debt, right? I mean, we've seen it time and time again. We've seen things go through the court system and funding secure, and the Lendy cases where people didn't think they should have to pay their loans back, and then I think unbolted too. But yeah, these are possibilities that can absolutely happen with these loans, especially if they're not legally really secure, tight when they were written up in the contracts. These lawyers will find a way to crack into those if there is a possibility, so that clients don't have to pay back the money. As the case proceeded, further details of alleged fraudulent activities were uncovered by the court, and bankruptcy proceedings were eventually commenced against Mr. R. Soma approached the couple a number of times to engage him in a settlement offer, but the case eventually went to trial in February 2024. That is the last case scenario that you want when it comes to trying to recover debt, especially when it's 400 and something thousand, because you're going to end up spending a lot of money in court on legal fees. The court ultimately found that the loan was legally binding, thank God. Normally that should happen. And that Mrs. R had not been unlawfully and unduly influenced by Mr. R when signing the legal charge documentations. After the hearing, the judge rules the defendants must give Soma possession of the security property within 90 days. The defendants' counterclaims and right to appeal were also dismissed. Good. Finally, one victory where the courts did the right thing. Following the ruling was inundated with messages of support. So following the ruling, Somo, missing word there, was inundated with messages of support from its investors and a testament to the platform's popularity and strength. People saying, keep up the good work. And Somo said, while anyone can lend money, the true challenge lies in securing its repayment. Somo has lent more than $330 million across more than 1,500 loans. Now, what I don't know, and I'm presuming because it says down here, all Somo loans are secured over UK property. The platform has reported zero capital losses to date. So I'm presuming that with this situation that, well, they probably haven't been able to sell the property yet to pay this loan back. So I don't know, what the financial situations were on that particular loan. Hopefully they'll recover all the money for investors. But it does go to show you a really good real-life example of what happens when a P2P lending loan goes to court. I just made a mess on my desk here. But yeah, it gives you a real-life example. If you're new to P2P lending and you think, oh, there's no risk involved here, this is a perfect example of the things that can happen. Hopefully it doesn't happen often, but things like this do happen from time to time, so things can end up in court. So don't be surprised if you dump a lot of your money into one loan thinking, oh, this looks like a great loan, and then, one single loan gets into trouble, and now you're saying, oh, God, I'm going to lose a part of my investment because, the company wasn't able to recover enough money to pay the debt loan back to investors. Moving on, Bondora. Our friends over there in Europe, they have reported a 59% increase year-on-year in profits to 3.4 million euros, about 2.9 million pounds, in its 2023 financial results. The Euro peer-to-peer lending marketplace posted a revenue of 44.4 million, up 21% compared to 2022. A little interesting math there. You can see that they're making about not even 10% profit on their revenues there. So bringing in 44 million, profiting 3.4 million. Of course, accountants might be able to look at that bank statement or that financial statement saying, well, they did some weird things here to reduce their profits for tax reasons, but less than a 10% profit. So pretty lean. During the period, Bondora increased the average number of its employees to 166 from 138 in 2022. They issued 202.5 million euros worth of loans, including 139 million in Finland and 40.2 million in Estonia. I think they're based in Estonia. It made 7 million euros from loan originations fees and 23.1 million from loan administration fees, while the revenue of sale of additional profits totaled 13.3 million. I always get a little nervous when these companies get very big. Like 166 employees is a lot to make a 3.4 million euro profit. That's one thing I think is important to keep an eye on, because if these expenses do balloon, and payroll is one of the big expenses that these companies have to face, you want to make sure that these companies are actually operating in the black, especially companies like Bondora that have been around for a long time. But Bondora said that the 6th year that it's going, Grow investors had a return of up to 6.75% per annum. I'm not a Bondora investor anymore. I used to be a long, long time ago. Return rates are really high. Just didn't really like the idea of investing in European loans because I didn't understand anything about them. And my father, bless his heart, always said, if you don't understand it, probably either work to understand it and learn it or stay away from it. And I just didn't have enough capacity in my small little squirrel brain to learn about the Euro market in the way that I knew about the UK. But I know of a lot of European investors that are having really good results with Bondora, especially self-selecting loans. So it's good to see that they're operating in the black at the very least. What else we got? Another Euro company, peer-to-peer aggregator, Mintos. I think that's how you spell it. Say it, Mintos. They swung into profit after a transformative 2023 year. Net profit of over 650,000 euros, about 546,000 pounds. And that was following a loss of 196,000 in 2022. Revenue increased year on year to reach 11.4 million euros. So again, really lean, right? They're making, what is that, 6%? 6% profit on the operation of that company. We'll see what happens. I just think that at least they're going in the right direction, right? A lot of these tech companies are operating in the red for a long time, reporting losses. So going in the right direction, but 6.5% is pretty lean. 7% profit, something to keep an eye on. Mintos, but going in the right direction. There's an article here that said peer-to-peer lending investors can accumulate 1 million in euros in just 18 years. There was a article that was on RoboInvest or RoboCash. It didn't really have a lot of information about the actual inner workings of what this report was based on, but it said, for modeling the process of capital accumulation, the platform specialists compared the average income of European citizens, inflation and taxation levels over the last 24 years. And they came up that, on average, if you invested through peer-to-peer lending, you could save 1 million euros in 18 years. It didn't really tell you how much you needed to put in to do that, so I found that study to be a little bit incomplete. But it's saying the assets chosen were equities, bonds, deposits, and peer-to-peer. Also doesn't tell you what percentage was put into each of those. But that was done in order to maximize capital accumulation. And then they say it's important for individuals to strive for a lower tax burden and invest in high-yielding assets to try to retain more of their income. See, trying to fight inflation, right? According to the study, Swiss citizens can earn 1 million the fastest in 22 years because of their lower taxation. The longest period to earn 1 million euros would have endured by poor Romanian citizens. It would take them 489 years, and the shortest for peer-to-peer, 217 years it would take them to accumulate 1 million euros. The main reason the Xbox site is the high rate of money depreciation in the country. What is money depreciation? Inflation. Of course, Romania is one of those countries that is struggling with inflation, which is why we have to invest, because we're always fighting about how we're going to stop our currency, our fiat currency, like pounds and dollars, devaluing quickly, because they are devaluing every year. So you got to take that risk and invest. Fourth Way has released a direct lending index which shows 10-year performance of peer-to-peer lending. It's interesting, go check it out, because I think the industry definitely needs something like this, a direct lending index. But this just shows you annualized that you could make around 7.36%. This is starting from tracking January of 2015. This is called the Peer-to-Peer and Direct Lending Index, the PADL Index, and it was launched this August of 2024. It enables investors to compare long-run returns to shares and other asset classes. Constituents returns have massively outpaced the stock market, so this is peer-to-peer. In the 10 years start of the index, annualized returns after costs have been 7.36%. In the same period, the stock market returned 4.9% after reinvesting dividends and other stocks. Obviously, this is going to be very, very biased towards peer-to-peer lending, right? Because Fourth Way obviously is a peer-to-peer lending-based website that focuses on that. They get paid from peer-to-peer lending companies to analyze their information. Now, the primary constituents, so this is going to be the constituents that they took the data from. We got Capital Rise, Crowd Property Investment Fund, Cufflink, LoanPad, and PropLend. So taking all of that information from those companies, aggregating it. I think, again, I mentioned this about running these types of numbers. If you have been in peer-to-peer lending for a long time, you're going to have probably invested in some of the companies that have gone out of business, and we don't know what those returns are going to be likely to look like. So this is Fourth Way is painting a rather rosy picture for people that avoided the lendies and the funding secures and the collaterals, which I did not avoid those fine investments. Fourth Way is painting this nice picture of the companies that are still operating and the ones that are still operating well. PropLend, too. I mean, these companies are good companies, solid companies. LoanPad, PropLend, Cufflink, Crowd Property, Capital Rise Investment Fund. They're solid, because they're still in operation, right? But if we'd invested and used the numbers from including the bad companies that have gone out of business, I wonder what those percentage returns would actually look like. I'm sure they would look a lot worse. But they don't have those numbers in there. I think that they should include those numbers. I think the out-of-business companies should be included in this index, because you want people to have a very realistic idea of what you're actually going to get if you invest in a company that goes out of business or doesn't do very well. You're not going to get 7.36%. And I think this is why diversification is so important. I don't know anybody that went 100% into peer-to-peer lending with all of their assets, because that would be very, very foolish. As much as I think peer-to-peer has a place in an investment portfolio, you need to have a very realistic outlook on what you're actually going to be able to achieve, knowing that a company has the ability to go out of business and maybe return 15 to 20% of what you loan to them or to their lenders back to you. But it is interesting nonetheless. You can go to Fourth Way's website and take a look at it if you want to take a look. Let's look at Cufflink. Put out an announcement. I knew it was coming. It was going to happen. We knew it was coming. They've got the new auto invest rate changes that happened from September the 3rd, just 2 days ago. 1 year now dropping from 10.25 to 8% gross. 2 year has actually increased. So they're trying to attract people into the 2 years. So 8.86 up to 9.13, so not bad. And then 3 year is remaining unchanged. 7.5% will be the gross for the 3 year product. And to ensure we continue to offer our investors competitive products, we regularly review our offerings. Now you can lock in an interest rate prior to your investment term maturing within a specific time frame. Investors will be notified when your auto invest term is 60 days away from maturing, and again at 30 days prior to the maturity date. During the 60-day period, you'll have the option to reterm your investment. Upon your confirmation of the return, the rate available on that day within the 60-day period shall be secured. Why do you care about that? Well, for this exact reason, that if you secured at the time when they give you that 60-day notice and the interest rate was a favorable rate, you're going to lock that in. If you wait till right before your loan matures or you let it mature, you do run the risk that interest rates may have dropped and then you're not going to get as good of a rate. But that's like looking into the crystal ball, right? We don't really know what those rates are going to be. I think it's safe to say that the Bank of England rates are going to drop this year again, so maybe locking in when you can lock in at the better rates is probably a good idea. We want to get the best interest rates we can. Going back to that news release, once the term has been confirmed and the interest rate is secured, you will not have an option to amend or cancel the interest rate or term upon the maturity of your existing investment. So basically, if you're 60 days out and you want to take that rate at the 60 days, you're not going to be able to change it at that point. So if 30 days later you need that money, you're stuck. The return and the interest rate shall take effect from the maturity date of your existing investment. So read the terms and conditions on these new changes because it will affect you if you are a auto invest lender. You can see right now, this is the Cufflink dashboard, these new rates right here, the 2-year, which has increased. So that's pretty attractive, I would say, for a 2-year rate. Now you can lock in an estimated 9.13% or 8.75% gross per year. You do have the 1 year 8%. I would think, honestly, this is going to drop again when interest rates do drop because Cufflink is going to have to reprice to remain competitive. The 3.5 or the 3 year at 7.5%, not so keen to do that, to lock money in for that long. But, again, if rates do seem to come down to 4 or 3.5% Bank of England rates, then this 7.5 isn't going to look bad. But I tend to think, personally, I'm more into the 1 or the 2 year product. I don't really like locking money in for longer periods of time than, say, 2 years. I think this is a pretty attractive rate, 9.13%. Let's continue on. Blend set out, if you're a Blend network investor, you're going to see they put out their property report that they do every month. They're talking about the same thing here. Bank of England interest rates taking a base point cut of 25 points, which is 0.25% on August the 1st. So right now 5%. They say that has increased the demand for mortgages and will help increase, obviously, house sales, which is good for P2P lending because developers are going to want to build more homes. You can see here the mortgage approvals. This is the rate. Why does it keep doing that? I don't know why it does that. But yeah, you can see this big spike after the pandemic. Lockdowns happened. People started buying houses for some reason. I don't know why then, but they plummeted here and then back up here. And then you can see the steady decline as interest rates continue to rise to battle inflation. Demand dropped. Now the government's trying to refire that lending pattern, so people want to buy more homes. Now it's starting to uptick a little bit, and then it's flattened off just a little bit in June. So the shortcut statistics, 2.1% has been the average annual growth rate of UK house prices. So June, 2.1% up versus June of 2023. Summer boom. According to Rightmove, the number of potential buyers contacting estate agents about homes for sale has jumped to 11%. I don't really know what that means. Contacting an estate agent doesn't really prove anything, but okay, so the phone calls are up by 11%. Good to see. Let's look at Assets Exchange. Had an investor update. they had a little bit of a problem with the house they were supposed to get into their ownership. You can see here, unfortunately, the Mears property on Front Street had problems at the advanced stage of legals when it became apparent it didn't have full planning permission for the conversion. I do like the fact that Assets Exchange is very transparent about what's going on. This seems to have caused a mix-up between the owner and the architect, but the planning application has now been submitted. The property remains in the pipeline, but will likely be launched later this year. There's a new feature now, as we discussed before. You can do monthly withdrawals. If you want to take out money automatically every month, you need to have a minimum of £30 to do that withdrawal, but you can set that up. I think that's a good thing. The Trading 212 portfolio is not looking very happy this week. 19,641 pounds right now is where we're at. So big hit, over 2,000 pounds. So about 20% lost over the last couple of weeks. Obviously, if you do follow the markets, you'll have noticed that things have been kind of going down, not doing particularly well. And look at the Coinbase price, 160 today. We were seeing prices about $100 more a share for that. Advanced Micro Devices is now in the red by 3.6%. Amazon in the red at 1.05%. Coinbase were in the red at 5.48%. Creative Realities has been one of the bright spots, but this is the stock I'm actually trying to do some trading with. We set up buy orders at, I think, about $4. Let's see here. So we have an order in for this. Maybe not. But yeah, the plan was to trade it between $4 and $4.50. So it did go over the $4.50 price, now back to $4.30, which is why I think if I was trading stock properly, this would be the one that I would do. Not that I wouldn't do it with any significant amount of money because of the risk involved. But this is one of those shares that just bounces around a lot, and that's how traders make money. So if this goes back in the $4 range, this will be another buy, and then try to get out about 10% higher at $4.40 to $4.50. We're 13% in the green on that one. NVIDIA has just taken an absolute beat. The last 3 months down 12%, 14% in a week. So if you are a NVIDIA fan, this is not a bad time to be looking at getting into this stock. But we are still up 7%, but not been performing very well, as has none of the tech stocks have. Rivian still 13% in the red. Valco Energy 20% in the green, but was still down 12% this week. And our trusty Vanguard S&P 500 stock has 2.47% down in the last week, which is a lot for the S&P 500. I mean, that's a pretty bad week. I was still a little bit in the green, 10 pounds up, but I just wanted to show you the dangers of kind of this type of investing, and why, honestly, if you're going to invest like this, you really have to buy and hold. If you look at our history on the Coinbase, when we first started out in November of 2023, the purchase, you see down here at $114 US, which is a great, I thought, price to come in. And then I sold a couple here at 142 US, which then the price went back up. So I bought back in 135. Hang on, I'll show you here. I think I bought a couple here at 126, and then continued to buy when it was going higher at 140. Sold again here at 192, which looks good now. Sold at 222. Sold at 750 pounds worth at $238, but then started buying here again in May at a very high price of $203 US. So here bought 500 pounds worth at $194 US. So this is why trading is really a fool's game, because you think you're going to try to catch these high and low points, but what you end up doing is selling sort of here and then rebuying up here because you think, oh, the price is still going to continue to go up, and then you see these falls. Nobody knows how to hit these complete bottoms. It's very, very difficult to know how to do that. At least I have no idea how to do it. I just go off of what I've read and what's happening in the market that company is based in. So Coinbase, obviously crypto trading company, and their profits are going to come from people buying and selling cryptocurrency, and the institutions that are using them as a custodian for holding large amounts of cryptocurrency. But the problem is when the entire market decides to dump, or the cryptocurrency market dumps, then Coinbase's shares go take a poo-poo too. So you can see up here our high was at $265. We're almost $100 a share off that high. Dangers of stock trading highlighted right here in this portfolio going down. I mean, imagine if this was a $190,000 portfolio and losing 10, 20,000 in a week by taking these risks. That's not very good to stomach those types of losses. It looks good when you're winning, but when you're losing, it really hurts. So the portfolio is not doing very well at the moment. Not too worried about it. I think it's going to be a choppy year for the markets anyway, because we've got the U.S. election coming up in just 2 months away. When that is sorted out, I think you see interest rates start to drop this month, actually. Who knows what that's going to do to the market? People could look at that as a plus, other people as a minus. Generally, markets tend to move negatively when interest rates are cut, but who knows? The way the markets are right now. One of the other things too, if you are buying American shares on the UK market, you're going to see here in red down here, hopefully you can see this, there's a little line down here that says FX impact. So this is when the fluctuation in currency exchange happens. You can see I'm down just 4.41% just due to the difference between the pound and the dollar impact on the investments. So, yeah. So while we're only down, look, 33 pounds on Coinbase overall, 105 pounds of that loss has come from the currency exchange. So that's the thing, when you do buy overseas stocks, you are going to get hit with that currency exchange impact. So keep that in mind. You can see here that the price of the US dollar to the pound now, you're getting 1.32 to 1 pound. And that has really gone up quite a bit. We're down here when we were down in 2023 at 122. Of course, that's pretty low. We even went as low as close to parity of 1.08 in 2022. So 2 years ago. So you can see that exchange rate started to get stronger in the American dollar, weaker in the pound. Of course, having an impact on this trading 212 portfolio. Let's see what else. A little bit of Bitcoin sentiment. Kamala Harris, of course, the U.S. presidential candidate, has reported to be friendlier towards cryptocurrency, which a lot of the times this is just things that these politicians say to get votes, but it does say in this report she's going to support policies that ensure that emerging technologies and that sort of industry can continue to grow. I don't know what that means, but there is a lot of political clout in the crypto industry now that are probably pressuring these presidential candidates. So that's a pretty interesting thing. Let's go to the mailbag, because it's already 8:10 p.m. over where you are. If you have questions or comments too, put them in the chat. I'll take a look at the end. Here we go. The mailbag. Hi, Lawrence. Long-time financial thing lurker here. I'm 31 years old. I've grown up relatively poor, never really having any money. My mom and dad never taught me about money, and they bought things using loans or heavily in debt. I don't actually get a lot of emails like this, talking about people that are in more of a poorer situation. just because I think peer-to-peer investors tend to be a little bit more financially set up and a little bit older in their lives. So it was interesting to get this. It goes on to say that his parents are good people, but he doesn't want to be like them financially. He was recently blessed with an inheritance from a relative. It's more money than I've ever seen in my life, £10,000. My dad approached me and asked if I'd be willing to lend him part or all of the money for a new business he wants to start. That makes me very nervous, and I'm leaning on saying no, but I'm afraid my dad will be mad. I've read quite a lot of the articles on your website, financialthing.com, about investing, but honestly, I'm not really sure. Part of me wants to go see a financial advisor so I don't make any mistakes, but I know I can do things myself and do things the right way. I have £5,000 in savings. I don't have any debt at the moment. My old banger is paid for. I'm just renting a small flat. I make $26,000 a year at work after tax. My expenses are about £1,500 a month. Do you have any advice you can offer me as a younger person who is coming to money for the first time? Thanks, mate. Keep up the good work. Harry in Carlisle. Okay. A couple of things here. First of all, don't lend the money to your dad for a new business venture. That is just not going to end well. You have very little chance of that ever working out. I've just heard so many horror stories about people lending money to start businesses. And speaking from a personal note, when I was young and dumb and I actually had a little bit of money, I lent it to somebody who wanted to invest in a business, and first 18 months went really well. I lent it with personal guarantees and fixtures and fittings on the business. First 18 months repaid, loan payments like they're supposed to, and month 19 disappeared. So a very painful experience. It was a decent amount of money for me at the time. So I can honestly in my heart always say usually those types of arrangements just don't work. New businesses are very hard to begin with, and especially if your dad, you said, is in debt, hasn't really taught you about money, how could they possibly know how to start a business? So I'd say, first piece of advice, do not lend the money to your dad. If he gets mad, that's his choice, right? And I wouldn't worry about it. He'll get over it. Don't be pressured into lending family members money for things like that just because you're afraid they're going to get angry at you. If they love you, as they should, you're their son, they're going to get over it. Second thing, you've got no debt. Well done. That's awesome. You're renting, so sounds like you don't have your expenses are manageable. What advice can I offer you? I don't think you need to go see a financial advisor. There is a great article, even if I do say so myself, on Financial Things website. If you go to the homepage, you'll see here on the right, single stocks versus trackers. I do need to update this. This is going to tell you everything you need to know about. Okay, it has 39,600 views. It's going to tell you everything you need to know about how you can invest whatever you feel comfortable investing through the use of tracker funds, right? And it shows you the tracker fund that I personally use. It gives you some data too about how the actively managed funds fail versus trackers. An S&P 500, for example, it says just 6% of the funds that were actively managed by large institutional companies, only 6% of them beat the S&P 500. So this is why you only need one product, and that is the U.S. Index Equity Fund. Okay? Go to Vanguard investor.co.uk and look up the U.S. Index Investor, U.S. Equity Index Investor Fund. You can get it at a discount right now. It is trading at £927 and 58p. So for your 10 grand, you could pick yourself up 10 of those and let it sit. The 52-week high is £968. So you're getting a bit of a discount. It's very simple. You don't need a financial advisor. I think you're doing fine. Make sure, too, out of your 10,000, you got some emergency fund cash, which you do, you have 5,000 in savings. That's enough for 3.5 months of your living expenses. I tend to keep about 6 months, so that would be another, so 6, so 9,000 total. So maybe take 4,000 out of your 10,000, add it to your savings, and don't touch that just in case something happens at work. Take the rest of it and invest it in that index tracker. Not financial advice, but that's what I would do if I had 10 grand today and I was in your situation. I'm presuming you don't have any other debt, credit cards, whatnot, or anything else that has to be paid off. It's really simple. You don't need a financial advisor. I was looking at a Reddit thread after I read that email. There was also another bit of advice I could give you, Harry, which I think is really gold advice. And the title of this thread was, what was the best piece of financial advice somebody ever gave you? This guy, Toby, said, get into the habit of regular saving early on. £50 a month set into a stocks ISA or similar from the moment you start working won't be a noticeable chunk of money, but it'll do wonders over time. Clearly, the more you save, the better, but it's better to save a little over a long period than a lot later on in life. That is just absolutely golden advice. Set your investments on an auto investment. Once you put that chunk of money in that you can afford to put in, then every month set an auto invest to come out of your work pay to go straight into that same product and forget about it for the next 30 years. And I promise you, Harry, when you come back in 30 years' time, whether I'll be around or not is a unknown, but hopefully I am, and you can come back in 30 years and say, wow, 30 years ago you told me to do this, and now I'm a millionaire and I can retire. Great little piece of advice from that. Set up your auto invest. Absolutely essential. And speaking of financial advisors, there was an interesting Twitter post. This guy, Vance Roberts, said, I just canceled with my financial advisors. They tried to keep me with them until after the election in the US because of the volatility. I said, it's okay. I'm throw most of the money into the S&P 500. And they chuckled and said, well, we want to try to smooth that out for you a little bit. He said that he could have quite easily have said no, he would stay with them and pay more fees, but he knew what the right option was. The fee isn't much, about $1 a day, but like Castle Capital says, and I've said the same thing, why pay someone when the S&P 500 beats 95% of advisors and also managed stock funds in the long term? This guy says, I'll bet on myself and on the market. Bingo. Exactly what I've been saying. People are getting wiser and smarter. Another email from the mailbag. Hi, Lawrence. I've been saving out some money to invest in the markets, but things are looking really choppy right now. It's very true. Given that there has been quite a few peaks and valleys in the last couple of months, do you think now is a good time to invest, or should I just wait for the market to drop again? P.S. I only want to buy tech stocks and an index tracker. Thanks, Carly, longtime blog reader. Again, I mean, look, nobody's got a crystal ball. There's a possibility that when this U.S. election comes in, the right person wins, the markets take off. The wrong person wins, in the market's opinion, the markets drop. If you have plenty of time on your side, I don't think it matters. I think you could invest a little bit every month for the next couple of months till after the election, or just dump it all in at once and set it and forget it. There's just, I mean, I get these questions all the time. There is no way to know what is going to happen. You could be sitting out. I mean, think about 2020 when the market dropped. And people were saying, well, it's going to drop more. It's going to drop more. And people sitting on the sidelines still waiting for that opportunity that they totally missed that huge run up in the markets. You can see here when it happened. Hopefully you can see here. Come on. Let's try again. Refresh. If we look at the 5-year, 2020, you had the big drop, right? There were people that thought, and myself included, I thought it was going lower. And there's a lot of people that waited and then they missed and said, I'm not putting it in up here. I'm not putting it up here. I'm not putting it up here. And then they waited Didn't put it in down here either, and now look, they've completely missed this absolutely massive run from 2300 where the S&P 500 has doubled. So if you're trying to just figure it out, it's impossible. I think the way is just go with your convictions, invest in what you understand. Tech stocks, I don't know. I mean, that's up to you. I personally would put it in an index tracker and just wait. Sit and wait and do nothing. Another one, Lawrence, I want to dip my toes into crypto, thinking about Ethereum or Bitcoin. Which one would you choose and why? Cheers. Tony in Brighton, currently raining cats and dogs, I suspect, in June. Tony sent this. If I was going to invest in anything, not saying I do or you should, Bitcoin would be the one. Completely autonomous. Ethereum is run more like a company. Bitcoin is run very independently. Nobody is the boss of Bitcoin. Also on sale right now too. Another one, 56,000. You can see it's been a bit of a couple of weeks. Well, maybe I'd say a rough month. Look here, you can get yourself a $10,000 discount now on Bitcoin at 56 grand. So I wouldn't personally do the Ethereum thing. You might see better returns with Ethereum, but this is, for me, is the safer bet if you are going to take that risk. Not financial advice. T, bit of an off-the-wall question. I know you like talking about other things on your YouTube, so what's your favorite brand of tea? I've never been asked this before. My wife and I are having a healthy discussion about this. His is Tetley. This is Roger. I mean, why not answer that? There is only one answer for me. What's your favorite brand of tea out there? I don't know. I used to think it was PG Tips. But now it's Barry's tea. I don't know why I like it. I went to a fish and chip shop once, and they were serving Barry's tea. It was delicious. I do the red box, the gold, right there. If you're ever in a place called Westbourne down in Dorset, there is an amazing fish and chip shop down there called Chez Fred's, which I think is the best one I've ever been to. I've eaten a lot of fish and chips in my time being a boy from Grimsby, but Chez Fred's is excellent, and they serve Barry's tea. And I normally don't order tea at a restaurant, but I did there. And I asked them, what tea do you use? This tea is amazing. And they said Barry's tea. So that's what I drink. Great question. Anything else? Let's see. Barry's tea. What a great tea. That's going to be too long. We'll do that next week. I think we covered everything. Oh, this was a really interesting post that I found. This is 11 years ago. Somebody wrote, last week I put my life savings into Bitcoin. I'm only 30, so I know while it's a risk, I'll still have the chance to recover if it crashes. I have a full-time job. I just thought how people around me are putting money into their houses, children, and expensive weddings, and it's going to disappear. I put a total of $50,000 and brought in. I don't know how long I'll keep it in, but I'm thinking at least 5 to 10 years. Haven't told anyone, don't plan to. I feel good about it. Wow, I mean, I was doing some rough calculations, and that 50 grand now is probably worth 8 or 9 million US dollars. So it just goes to show you there were people that had a lot of conviction back then, 11 years ago, to take that kind of what would be seen by some as a very crazy risk. Other people think not, because they would say, well, I'm trying to put my money into anything but a fiat currency that can outperform the pace of inflation, which many believe is 8% plus, and what we're told is 3% is nonsense. So this guy had conviction, and he did well. So I thought that was an interesting post, and I thought I would show it to you. I think that's it, though. I think that's all I got for you. Again, if you enjoyed the stream, please hit that thumbs up and visit our sponsor, Cufflink, because they've been good to the stream. And support them if you want to. Sign up for a free account. The crystal ball index, someone called it on forums. I like that. Funding circle, many defaults, assets capital, slow getting money out. Dave Dawson says he wouldn't lock money in at 8% for 1 year. Bitcoin took a big hit. I don't think it, I mean, is that a big hit though? In such a volatile product, 10%. Bitcoin is used to taking hits that are 30, 40, 50%. So 10%. For people that have been in Bitcoin for a while, it's nothing. Good time to move cash into dollars. Interest rate is higher too. Yeah, and by the way, you can do that. You can do that in places like Wise.com. You can change your money into whatever currency you want and get those higher interest rates because they offer investments in all the different currencies. So I use the UK one myself in there, but I know they have the US dollar investment and it is quite a bit higher. So good point. Yorkshire tea. Wow, look at this. Yorkshire tea, Yorkshire tea, Yorkshire tea. I don't know that I've ever had Yorkshire tea. Peter Vince finds Yorkshire tea too strong and uses the Sainsbury's red label, half the price, and compostable tea bags. Okay. I don't know if you can even buy Yorkshire tea. I used to pack big bags of tea when I would come to the UK and bring them back here because the tea is quite expensive if you buy UK tea over here in the US. At the supermarket, they really overprice things. Here, if you want to buy a tin of Heinz baked beans in the US, you're going to pay around $3 US, which is about £2.20 for a can, something like that. So I don't know if they have Yorkshire tea here. Let's see, Yorkshire, not Yorkshire Terrier. Yorkshire tea. Because I'm almost out of Barry's tea, so I'm gonna have to go for a new one. How much is it worth? How much would you pay for Yorkshire tea? Let's see. Is it the gold? Is it the Yorkshire tea gold or just the regular? Proper black tea. 100 tea bags. That's really not bad. They actually have a Yorkshire tea store over here. So look at this. In the US, you're going to pay $3.99 for 100 tea bags. Free delivery. That's actually really good. I think I'll order some of those. Good suggestion. I'm going to try it out. Yorkshire tea. Paul Bagworth drinks green tea. I tend to actually drink matcha green tea powder most of the time. Yeah. So, but that's super expensive. It's about $45 US for a can of the powder. Then you just mix it with hot water. Yeah, I should just bring it back. You're right. Heinz is a U.S. company. That's odd. Yeah, but the baked beans that they make in the U.S. tend to have meat inside of it. Pretty disgusting, like bacon infused. The Americans are obsessed with bacon. They put everything in bacon. I mean, they put bacon in everything. They have bacon infused muffins and chocolate here. It's wild. Imagine that. Anyway, I'm going to get out of here. It is 8:30 p.m. UK time. So see you next Thursday. Thanks for coming and join us. And yeah, I appreciate you. That is all I got. You have a nice weekend, everybody. Much love to you all. And I'll see you next time, okay? Take care. Bye-bye.